Hi guys, welcome back to the FundedNext series. Today we're gonna obviously continue on with what happened last week. We finally managed to successfully get out of the losing trades that we were in. So if I just show you effectively what we had. Well, let's start from the last win and the next win, right? So we had um one So we had one, two, three, four, five, six losses and six losses, one break even, and 1/2 hour loss. So 6.5 hour we lost um, between January 20th and the 23rd, which is it's effectively a whole week's worth of trading if you look at it from the Monday. So yeah, we definitely had a losing week, and if it wasn't for obviously the risk management being in place, we definitely would have lost this account. If it was due to the fact that we were revenge trading at any point in time, we would have lost this account. So what I'm really proud of is the fact that I was able to stave off the thoughts of let me just risk it all, let me just gamble, or let me just YOLO. Um, I was trading my system. I was putting my stops where I thought that they wouldn't be hit, and when they were hit, I was, saying kudos to the markets. And this is one of those things where scientifically it is quite possible for you to have 8, 10 winners in a row or losers in a row within a however many trade sample size. Within 100 trade sample size, you are bound to lose or win consecutive trades in a row, which means that you have to be ready for situations like this. And all of my losses were within 1 hour of the account. So a 15K account, $150. You're talking about 150 dollars loss. What I did do, however, was I have decided to utilize an ATR based stop. Now, what the ATR based stop, specifically the 15-minute ATR based stop. So, what I've also done, I've done two things. Number one is our ATR based stop. One ATR, you get the gist. And number two is a 1 to 1.5 RR risk to reward. Now, this actually came to bite me in the ass because the day I won the trade, the market actually went at least 3R. So I'll just show you the trade itself. If we scroll back a little bit to where the trade was entered. So it was entered obviously the previous day. Let's scroll back to where it was and let's hide this. So hang on, not letting me scroll for some reason. Oh, there it is there. I don't know why it's not letting me scroll. But anyway, I actually entered. Let me just make this a little bit in. So you can see this is the position here. Market came into a OB, something like this, and then made a break of market structure shift here. So what I commonly look for is a break of market structure, a return to the order block. So a break of market structure, OTE, return to order block, and then a fair value gap entry, looking for a 1 to 2, a 1 to 3. So in this instance, you had um, the market structure came back into this zone with this higher level of resistance up here, and I was targeting basically a 1 to 1.5 was these lows here, but my 1 to 1.5 target exited me out of this trade here. It did eventually go all the way down to these levels here. So this would have been a 3, 4.5. It could have been a 6R trade. Or down here is probably an 8R because my stop loss at that time was up here. So you can imagine that's how big it was. And obviously, if you see the entry is quite accurate. So there was virtually no drawdown. I mean, I literally entered and then the market went in my favor. So what I've done successfully this last few weeks is basically systemize the trading, right? Two, so this means you've got rules that you stick to for entries, like critical rules that you stick to. Regardless of what happens, you're entering the trades in the exact same way. Two, I have obviously, due to this, I've implemented an ATR based stop, right? So a volatility based stop, not just picking where I think the market is going to go. The market eventually goes, then comes back down to my level. I think that's happened a couple of times now. No, I'm picking an ATR based stop because if the market moves in that direction for that long, then that means I'm definitely wrong. I don't want situations where I've entered in whatever area I've entered in, the market goes against me, tags my stop loss, and then moves in the other direction. And then obviously three, I've instituted a 1 to 1.5. I found myself being in trades where the market would move about 1 hour, stop me out, and then move back to break even. So I move 1 hour, I put my stop loss at break even. The market moves against me, and then comes back down. It hits 2 hour, 3 hour, 4 hour. I don't like sitting in trades for longer than I need to. So I'm just going to be getting in and out, getting in and out, getting in and out. And obviously, the good thing about ATR based stop is, if you say, for example, I want to enter in this position here, it doesn't really matter whether you enter 20 pips lower or 20 pips higher. The ATR based stops puts your stop loss really, really far away and puts your target really far away, which gives you the ability to, exit at 1R, for example, if the market starts moving against you. So yeah, I mean, sorry for the drawings, but yeah, I mean, obviously you will have days like this where the market goes again. In your favor, goes really far, but you're not in the trade. But that's absolutely fine. That's to be expected, So um, this is also, obviously, I've also done this so that, um, I've also set obviously my position size a tool to make sure that I am always using my risk limits, effectively and appropriately, because I don't want to, get to a situation where I'm just picking and guessing. So, for example, if I was to enter a short in the area that I'm looking at now, the ATR, the 15-minute ATR, right, puts my stop around about this level here, right? So it puts my stop around about this level here. But I always want my stop to be above the pivot high, just in case the market tags it and then falls. So what do? I have to go back into, the 3 minute or maybe even the 1 minute and see if there's a better entry. So obviously on the 1 minute, the previous OB is probably this one here, right? So you can move this entry, which is the entry line, above here, and that clears that level. But you can also go back to the 1 minute and you can check, right? Does where I'm putting my stop, you know, is it in line with my rules? So if you have a look at the rules say you've got to have a break in market structure. The break in market structure was here, right? Then you have a return to the order block. So the last order block is this order block here. You can put your level there, knowing full well that the higher time frame bias also interacts or is in line with it. So you can move this level a little bit higher, right? And then when you do that and you go back to the 5 minute, which is the entry point, you're basically putting your stop loss all the way up here, right? So for a fact that if the market ever goes from here and it goes, oh, it does this and it goes all the way up here, it's not likely to come back down again and then go down lower. It's just not likely. So yeah, that's what I'm doing going forward. Managed to get out of drawdown, and we'll see what happens going forward. So yeah, I've done my analysis for the week. I'm looking at entries, on the Nasdaq in the 25 areas here. Again, on the S&P, I'm looking at areas like this. Gold, silver have just been continuously moving higher. So I don't even know if silver will come back down into this level. That's the only level that I'm looking to get long in. And then, of course, the Dow, the level I'm looking to get long in is up here because you've made a massive move lower, mitigate these, and then possibly come down a huge fair value gap in this area as well. So anyway, I won't make this too long, but this is my analysis. So hopefully we can have a better week than last week. But thanks for listening. Bye.